Assalamu alaikum and hello everyone. In this lecture, we will discuss the classification of cash flows into three different activities, that is, operating, investing, and financing activities. We will go through different cash receipts and payments, and then we will learn to classify these cash receipts and payments into one of these activities. So here we have the three activities. You can see that this is the statement of cash flows, operating, investing, and financing activities. Operating activities shows the cash generated or used in the company's core business operations. Like, for example, business revenues, sales, or expenses are a part of cash flows from operating activities. It reflects cash that comes from the main activities that drive from the company's core business or revenues. Likewise, we have cash flows from investing activities, and this part tracks cash used in on generated from investments such as purchasing and selling of long term assets like equipment, plant, property, building, vehicle, land, and so on, and other investments. It shows how much the company is spending to grow and improve its business. That's why this is called investing activities. The next and the last one is financing activities, and this records cash movement related to financing like loans, issuing of shares, buying back shares, and payment of dividends, and so on. So, this section shows how the companies raise or returns funds to shareholders or stockholders or creditors. So, you can see that by combining these section, this provides a complete view where the company's cash is coming from and how it's being used across different business activities. So we will get net increase or decrease in cash during the period by adding or subtracting these cash flows from these activities, and we add opening balance to get the closing balance of cash. So we are using Financial and Managerial Accounting book by William Zaka Bettner to practice the questions. And here we have in front of you problem number or exercise number 13.7. You can see we have different activities. We have January 1st cash balance and December 1st cash balance. So January 1st is your opening balance and December 31st is your closing balance. Then we have cash paid to or acquire plant assets. So whenever we purchase or sell any plant asset or any investment, this would be your investing activity. So this is your investing activity. We can write here this is your investing activities. Proceeds from short term borrowings, the borrowings whether short term or long term, this represents your financing activities. Loans made to borrowers, so whenever company made loans to borrowers, this would be investing activities. Collections from loans excluding interest payments. So collections from loans means these are the principal amount. So collections from loans are also your investing activities, like loans made to borrowers or collecting it back, both are your investing activities. Then interest and dividend received, if the company is following US GAAP, and we are assuming that the company is following um, US GAAP. So this is your operating activities. Then cash receipts from customer. Again, this is related to your core business activities. So operating activities. Proceeds from sale. of plant assets. So sale or purchase of plant asset is your investing activities. Dividends paid, so whenever you pay dividend, this would be your financing activity. Cash paid to suppliers and employees, so these are related your core business activities, so this is operating activities. Interest paid and income tax paid, all are your operating activities because these are related to your core business operations. Interest paid as per US GAAP is a part of operating activities. So as we are assuming that we are preparing this statement under US GAAP. So using the above information, prepare a statement of cash flow statement with proper headings of financial statement. Classify the given information into, as we have discussed, we have three categories. So we are going to classify these categories. And for operating activities, we are using direct method. Place brackets around the dollar amount of all cash disbursement. Means if we have outflow, then we will represent it by placing a bracket in the amounts. So first of all, as the proper headings are required, so we are going to write down the headings, the name of the company, Company, Yoming Outfitters Incorporation. Then we have name of the financial statement, statement of cash flows, then time period. This is for the year ended December 31st, 2011. And what we are going to do, we are going to classify all activities into one of these three. So cash flows from operating activities. As we have discussed, all cash flows that are related with core business operation are part of operating activities. So first of all, we have in operating active cash received from customers. So cash received from customers. We are writing it in the inner column with the dollar amount. We have cash received, how much cash is received. You can see that cash received from customer is the operating activities. Then pay to the customer is again operating activities. Then we have interest received, interest and dividend received is again operating activities as per US GAAP. Then interest paid and income tax paid. These five activities belong to cash flows from operating activities. So number one is $795,000. The another one is interest and dividend received. Interest and dividends received, which is $27,000. So we have $27,000. The other one is cash paid to suppliers and implies. So as this represent the cash paid, so this should be in the bracket because negative amount. So the amount is 635,000. So minus $635,000. The other is interest paid. Total amount is 19,000. So minus $19,000. Then we have income tax paid. Income tax paid is $71,000. So $71,000. And this should be with a dollar sign. Okay, so the way of presentation is to write down all the inflows together and all the outflows together from the operating activities. So what we are going to do, simply a minor adjustments, cash inflows from operating activities. So total cash inflows are uh, this one, and cash outflows from operating activities are this much. We are going to add all outflows this one. So here we are, this these are inflows, so we are presenting it in the outer column. This is the way of presentation, and we will calculate total cash inflows or outflows. So total cash used or provided by. You can see by adding these two. If this is positive, this means that total cash provided by. So this is total cash provided by operating operating activities. Here it is in the dollar amount. Mhm. So this is cash flows from operating activities. Next, we are going to calculate cash flows from uh, the next one is investing activities. So cash flows from investing activities, and cash flows from investing activities includes the cash paid to acquire plant asset. This will be included. Loans made to borrowers or collection on loans, both are the part of investing activities. And then any proceeds from the sale of plant assets. So these four activities are investing activities. So okay, so we are preparing cash flows from investing activities. We have cash paid to acquire plant assets, which is 21,000. So as we have paid it, so we will represent it with the minus sign, $21,000. Other one is loans made to borrowers. Loan made to borrowers are total 5,000, and again we are representing it with the minus sign. Then we have collections on loan, collections on loans, which is 4,000. So this is 4,000. And then proceeds from sale of plant asset, proceeds from sale of plant assets. So purchase and sale of plant assets, property, plant equipment, any long-term asset, purchase and sale. So these transaction belongs to investing activities. So we have 9,000 here. So by adding all these, we get 13,000 negative. So negative means we are using the cash. So total cash used for investing activities, and here you can say the total cash used. The next transaction and the next classification or the next type of activities are financing activities. So we are preparing cash flows from financing activities. We have discussed the financing activities includes the cash from short-term borrowings, and you can see here we have proceeds from short-term borrowings or long-term borrowings. Both are the part of financing activities. So 10,000 is proceeds from short-term borrowings, and then we have paid dividends of how much? 55,000. So we are going to we have first of all we have proceeds from short-term borrowings. So proceeds from short-term borrowings are how much we have discussed. These are you can see proceeds 10,000. So this should be a positive amount, $10,000. And then we paid dividends and dividends of 55,000, this one. So dividends paid, which should be with negative sign. So the total cash used for financing activities are here you can see 45,000. So total cash used for um, financing activities, we are going to represent it in outside column, and the total cash used or provided by during the year. So we have 97,000 from operating activities. Then we have used 13,000 in investing activities. So we deduct $13,000, and then again we use $45,000 in financing activities. So $45,000. So your total cash is 39,000, which is the net increase, because you can see this amount is positive. So you can say that net increase in cash during the year. So this is the net increase and decrease. It should be present with the dollar sign. Now we are going to add cash and cash cash equivalent balance on January 1st. So January 1st is your opening balance. This should be added. How much January 1st balance is? You can see 35,800. So we have opening balance, which is $35,800. So by adding these two, we get the closing balance of cash, which is 74,800. So this is your closing balance of cash, 74,800, and you can check it. This answer, cash equivalent balance, you can check it. This is 74,800. So this balance is your closing balance. You can check. So we from the January 1st balance, we add or subtract different cash flows from different activities to get the closing balance, and this closing balance is same as it is mentioned here. You can see this one. So this This is it from 13.7. We are going to do two more exercise in this lecture, and the next one is 13.11. So class, this is exercise 13.11, and you can see that these are different transactions related to cash, and we are going to classify these transaction into one of the three activities, that is operating, investing and financing activities. So the first one is made payments on accounts payable. So accounts payable to merchandise, so these are core operating activities because these are related to business transactions, core business transaction activities. Then the next one is paid the principal amount to the notes payable, to a notes payable. So notes payable is your long term liability. So long term liabilities, the payment of liabilities or debt belongs to your financing activities. So this is your financing activities. The third one is the C part, paid interest charges relating to a note payable. So this note payable is the principal amount. So this principal will always be classified as financing activities, whereas the interest charges may be classified as operating activities or financing activities based on the regulation or rules the company is following. If the company is following gap, then it would be a operating activities, or if the company is following IFRS, then interest charges would be classified as you can say it may be classified as financing activities. So interest paid is operating activities, operating, or you can say financing activities. Issued bonds payable for cash. So whenever the company issued bonds are your financing activities. Management plan to use this cash in the near future, but to expand manufacturing or warehouse capabilities. But right now the company is issuing bonds and getting cash. So this time, this right now, this activity is the company's financing activities. Then paid salaries to employees, or whether paid cash to suppliers, both are your core business activities. So operating um, activities. Collection from accounts receivable is a part of your core operations. Then transferred cash from a general bank account to a money market fund. So money market fund is just like a cash equivalent, so not included in the statement of cash flows, because money market fund is viewed as a cash equivalent. Therefore, transfer between bank account and money market funds are not viewed as cash receipts or cash payment, because this is just transfer from one account to another account without affecting total cash receipts or cash payments. So not included. This should not be included in the in cash flow statement. Then H part, use the cash received in D, this one, above to purchase land. Whenever company purchase or sale any fixed assets, this become a part of your investing activities. Then made a year end adjusting entry to recognize depreciation. So depreciation is a non cash expenditure, so this would not be included. At the year end, purchase cash in insurance policies covering the next 12 months. So insurance policy, insurance expense, this is your current asset and current expense. Company purchase insurance policy prepaid. So this is the change in net working capital. Again, this is the part of your operating activities. Then paid the quarterly dividends. Whenever the company paid any dividend, this is your financing activities. Paid the semi-annual interest on bonds payable. So whenever the company paid interest, this would be interest payment. As we have discussed in our previous lecture also, the interest payment would be an operating or financing activities. Depending on the rules and regulation the company is following, whether the company is following GAAP or IFRS. If company is following GAAP, then it would be a part of your operating activities, otherwise financing activities. The next one is received a quarterly dividends from an investment. So again, it would be your operating or investing activity. If the company is following GAAP, then it is a part of your operating activities, otherwise investing activities. Sold for cash and investments. Whenever company sold any investment, as the name suggests, it is your investing activities. Receive cash upon the maturity of an investment in cash equivalent. Cash equivalent is basically it is again the transfer from one account to another account, not actually any cash received or paid. So transfer between cash equivalents and other form of cash are not regarded as cash receipts or payments, so not included in the cash flow statement. So this is it from 13.11. We are going to practice another problem which is 13.12, and again we are classifying all the cash receipts on payment into one of these activities. So first of all, made cash payments on accounts payable to the supplier. So this is related to core business operations. So this is operating activities. Then paid principal amount to mortgage. Mortgage means this is just like a loan. So this is financing activities. Whether you are receiving or paying a loan, then this would be a financing activities. Paid interest charges related to that loan. So it would be an operating or a financing, depending on the US GAAP or IFRS. So if the company is following US GAAP, then it would be in operating activities or otherwise. Issuing the preferred stock for cash. So company is issuing preferred stock or issuing ordinary stock, ordinary shares. This would be financing activities. Paid salaries to the employees or paid to the suppliers, all would be your core operating activities. Then collected and accounts receivable. Obviously, this is your entry related to sale or core business operations. So this is your operating activities. Then transferred cash from a general bank account into money market fund, as we have already discussed in the previous example. It should not be included in the cash flow statement. Why? Because a money market fund is viewed as a cash equivalent, and transfers between bank account and money market funds are not viewed as cash receipts or cash payments. So it shouldn't be included in the cash flow statement. Uh, Number 8, use the cash received in 4. Here, company received cash by issuing preferred stock to purchase a modern manufacturing company. So the company is investing in another company. So this would be investing activities. Ninth, made a year-end adjusting entry to recognize amortization expense. As we have discussed in the previous example, that depreciation is a non-cash expenditure. So likewise, amortization is also a non-cash expenditure, and this should not be included in the cash flow statement. 10-year at the end purchase the cash an advertising spot for a local radio station for for the next 8 months. Again, this is your operating activities. Paid the annual dividend on the preferred stock. Whenever the company pay dividend, it is a financing activity. Financing activities. Then we have 12, paid the semi-annual interest. So regarding interest, we have discussed several times. It may be operating or financing activities depending on the rules the company is following. Receive a semi-annual dividends on the stock. So whenever the company receive dividend, it may be an operating or investing activities. So if the company is following US GAAP, then this means that entry number 12 and 13 would be an operating activity. Or if the company is following IFRS, then entry number 12 would be a financing activities and 13 would be an investing activity. Number 14 is the company sold for cash and investment. So when another company buy or sale an investment, this would be your investing activities. And last, company receive cash upon the maturity of investment of cash. So physically, basically, you can say one cash equivalent is transferred to another. So this means that it should not be included in the cash flow statement. Why? Because the transfer between cash equivalents and other form of cash are not regarded as cash receipts or cash payments. So that's it. We have discussed in very much detail about the about three different activities, their classifications, and that's it from this lecture. Take care, class.